Hi everyone. Today we will discuss about central bank digital currency. The money that you keep in your commercial banks as savings can be wiped out if your commercial bank collapses, whereas in case of CBDC, which is central bank digital currency, this wouldn't be the case as it is a legal tender issued by a central bank. Besides this, central bank digital currency could be trusted as cash and can be as convenient as the payment app. It will also get the benefit from the same blockchain technology which underpins cryptocurrencies. To avoid too much of disruption due to CBDC, just like cash, CBDC could also be distributed to commercial banks, due to which central bank will not have to deal directly with millions of citizens. Most of the money in today's world is digital, whereas banks makes a new loan, it creates new money, which is a digital deposit created by bank. This is fractional reserve banking. Commercial banks have to create reserves against customer deposits, and this money is of central banks. As small amount of this money can be accessed by us in the form of physical notes and coins, and these physical notes and coins are issued by the central bank. Digital rupee is freely convertible against commercial bank money. The supply of money by the banks in the economy is very elastic, and they are able to respond to demands for money in an economy. As per fractional reserve banking, when the economy is doing good and more goods are being created, then the supply of money can also be increased as people will take loan and make new investments. The central bank, in a way, controls the money created by commercial banks by setting the interest rates. If central bank increases interest rates, then commercial bank will also increase their interest rates and pass on the cost to the borrowers, which will make borrowing more costly, due to which banks will create less new money. Commercial banks create new loans digitally, whereas central bank also supply money in the economy through physical paper, cash and coins. This way, both central bank and commercial banks have direct presence in creating money and in payments and transactions. By the way, if you are interested in knowing the basics of central bank digital currency, you can watch our previous video on the CBDC, the link for which has been provided here. And you can also subscribe to our channel. Banks prefer to lend against tangible assets. And with economics moving towards intangibles like software and services, etc., the banks are reluctant to lend as intangible assets are an issue as security for a bank loan. Due to this, already non-banking based loans is rising, and this includes fintech and various financing private apps in the market. Due to this, the oversight of central bank over monetary policy is slipping away, due to which some central banks are creating their own digital currencies like CBDC in India to rival the tech giants' payment system in the hope that it will secure their grasp on the economy. But if most of the money will go into CBDC, which is central bank digital currency, then banks' fractional reserve system can be out of the job. This will be more felt in developing countries as most of the lending in these countries still comes from banks. This could affect the economic growth as they will not be able to rely on consumer deposits to finance their loans. The second era of the internet is blockchain, where the underlying technology is blockchain. There is cryptography, miners, which is in Bitcoin. The blockchain is changing money and business. The CBDC is real time and is based on blockchain oblique common ledger, which is updated on both ends immediately with the execution of transfer. E-rupee will be transacted using a digital wallet. The transaction will be recorded in real time to common ledger. In case of UPI and other payment apps also are done in real time, between customer and bank, but between banks they are settled later. This process of settlement between banks takes between 1 day to a week. But in the case of CBDC, this will not be the case as the transaction is between individuals and bank is not involved, due to which settlement will be immediately and this will not require post-transaction settlement between banks which takes time and money. In the case of CBDC, the payment and settlement is same activity. It is just change in the ledger. By the way, in the year 1694, Bank of England became the first public bank to regularly issue bank notes as an alternative to coins as a means of payment. China is trying to shift away from using US dollar. We know most of the trade in the world is invoiced and denominated in US dollars. Due to geopolitical considerations, China, through technological advantage, it can introduce yuan, which is the currency of China, into the market through digital currency. We will continue to make interesting videos. Do like, share and subscribe to our channel. Thanks for watching.